Welcome back, investors, to Ticker Time News. I'm Adam, and the stock market was in rally mode today, bouncing from oversold conditions. The S&P 500, which set a new low for 2022 yesterday at 36.23, broke a six-session losing streak today and closed above the 3,700 level at 37.19. The SPY even broke the 370 level by 0.53 cents there at 370.53. The Qs, it got really close to that 280 mark at 279.94, and the IWM got to 269.94 today. Everything up almost 2%. IWM up over 3%. So those small caps, like we've been saying for the past several sessions now, they got the biggest bounce out of the whole rally today. Now, the stage was set for a strong rebound effort before the stock market even opened today, as Treasury yields fell in response to a Bank of England bond purchase agreement or announcement. The major averages were all able to log big gains, despite losses in Apple. Apple was actually down 1.3% today. AAPL is that ticker symbol. There is a link in the description to TradingView. Click on it, sign up, doesn't cost a penny, and you can trade, you can chart right along with us at home. No trading here in the after hours. Here's Apple's chart. It has been a steady decline here since reaching its head and shoulders pattern here back in August 17th. That was its high during the summer rally, and it's come down a little bit since then. That high was 176 intraday. It closed at 174, and then today it was down 1.2%. You can round it up to 1.3%. Now, Apple, it had some troubling news today, mainly because of demand. And we're going to talk about that in just a moment. And it was all from a Bloomberg report. Now, Apple does plan to hold back on increasing production of that iPhone 14, but we'll talk about the demand issue for Apple in just a moment. Now, the 10-year yield, it breached 4%. Let's pull that up. US10Y for the 10-year yield. I cannot believe it. It finally did it. It broke 4%, and then immediately it pulled back. But overnight, it broke 4% right before the Bank of England said it is going to postpone the sale of gilts slated to begin next week, and instead carry out temporary purchases of UK government bonds between September the 28th through the 14th of October, I believe it is, in a bid to restore orderly market conditions. Now, the 10-year yield, it dropped 26 points, 26 basis points in a single day to 3.71%, down 5.4%. You typically do not see these types of moves in the 10-year. I mean, look at this. This thing has been on a march since the beginning of August, just up and to the right on the chart. And it really exploded over the past few sessions, especially the beginning of this week. And now it's cooled off. One reason for that, if we draw this trend line out and we keep it nice and steady and connected to where it was, you can see that the 10-year, it got away from itself quite a bit, following the trend line, and then boom, going up here. So it would not surprise me for it to come back and tag this trend line, and then we'll see what the 10-year is going to do from there. Is it going to continue to come down, or will it find support on that trend line and continue to move up? That is the interesting thing that I am curious about on the 10-year. But it dropped 26 basis points on the day, which was pretty substantial. And that was like a green light for equities to rock, right? Now, the 2-year US 02Y on TradingView, it dropped 21 basis points to 3.71%. 3.71%. That is pretty incredible. Now, that was serious moves on both parts of these yields here. Now, the 2-year, it's been on a rock and roll campaign, pretty much, going back to its bottom at the beginning of August, but then it kind of hit some resistance at a couple places. Really, it kicked off September 12th and just has not looked back until, of course, today. So, again, both the 2-year and the 10-year coming off like this and pretty substantially. That, again, was a green light for equities to rocket higher today. Then you throw in the mix the US dollar. The US dollar index also fell notably after the Bank of England announcement. It was down 1.2% to 112 points. That was another significant move that, again, gave a green light to equities to rocket off, right? So the 10-year, the 2-year, the US dollar, all coming down and coming down significantly, a huge rate of change, and then you get equities launching. These three things, the 10, the 2, and the US dollar, those were the three things that led to today's nice green candles, right? Of course, we have been sitting in oversold conditions now for a couple of sessions, right? For a couple of sessions. This is the SPX, right? This is the view for the S&P 500. It's the ticker symbol I like to see over the SPY because there is a lot more volume on the SPX ticker than on the SPY. A lot of higher dollar amounts are going through it. Look at this. Increased volume was a sign that, hey, the 10 and 2 are coming down, the dollar's coming down, volume's ticking up, let's jump in, right? Now, as you all know, I've had a long position open for a few sessions now because I figured it was just a matter of time before this bounce would occur. Now, yesterday during the live stream, you heard me say that I cannot say for certain that tomorrow will be the day that the market bounces because I couldn't. Because nobody has that crystal ball to time it perfectly. And it's not really about timing it perfectly. It's just about reading the room and determining when should you set up some long positions or when should you go short. Being down here, this short in the hole was not the place to go short. This was the place to go long. Now, we've really, if you look at the week, right, we've hardly really even moved that much. We started, Friday's close was right here at 36.93, was it? Yeah, 36.93 was Friday's close. And let me just highlight that there. That is right here. Last Friday's close was right here. So when you look at that close to where we were, obviously, today, right here, we really haven't moved all too much. Now, we did dip in the hole a little bit yesterday, pretty deeply, but we did pull back from that. And then today, it just happened to all the stars lined up, and we were able to bounce. And we are bouncing from an oversold condition. I mean, as a matter of fact, the RSI right now on the SPX is still at a 25. we are still technically oversold. So we could tomorrow, the next, we could continue this bounce. We've got a hole to fill right above us. As a matter of fact, we literally stopped right underneath this gap that needs to get filled right here on the screen. Now, the wick did go up and it reconnected with its 5-day EMA. That's a good thing. You want to see that. Definitely, absolutely. Now, it is still way down on that 5-day moving average. It is a declining moving average. So we're not out of the woods yet, right? We could still hit new lows, but I think it's safe to say, as long as there's no major headline news, if the Bank of England stays quiet for a couple of days, if there's no more news about Apple for a couple of days, then we could ride this bounce for the rest of this week. That is a path that this market could take simply because we are oversold. But we're not out of the woods yet. As you can see, as I bring this chart in, we are still in a bear market, right? We are still making lower highs and we are still making lower lows. Like I said at the beginning of this, right? Here we are. Boom, there's a high. Boom, there's a lower high. Here we are with a low, a lower low, a lower low, and yes, yesterday we technically made a new low for the year. Now, as all of you know, I do not think we are out of the woods yet. I think there is further to come down, but a relief rally is not out of the question. We have had many of these throughout the year. I mean, just most recently, we had at the September 6th, I think. Yeah, September 6th started off a nice 5-day rally right there. So who's not to say we can't have a several-day rally right here? It's totally possible. But then at some point, it's going to fickle out and we're going to come on back down. Now, 3,500 is a critical area of support. That could be the absolute low for 2022. I don't think so. I think we come on down here to 3275, but 3,500 is going to be a very important test for this market when we do finally in this bounce and start to reverse. But enjoy the bounce while it is happening. I am grateful that it is happening. My long positions will stay long until we get to the upper end of the weekly expected move. And let me just highlight those numbers for you so you're clear on that. I'm planning to stay long until we get to, or at least come close to, this upper purple line here, and that's at 38.17. So, but another 99 points for the S&P 500, and we got 71 points today. We get to that point, and I'm going to start taking profits. All right, just so you're clear on that. Anything above that, and I think we're starting to get into some risk, at least for this week. Now, buying today, it was broad-based in nature with many stocks coming along for the ride. Apple, however, AAPL was not one of them. Apple lagged or it logged a decent loss following a Bloomberg report that indicated it's pulling back on a plan to increase production of its iPhone 14 beyond its original target of 90 million units due to weaker than expected demand. Just another signpost pointing to a slowing economy. A slowing economy. Apple had it pretty darn bad. Pretty darn bad indeed. 1.2%. Now, Apple is still within its weekly expected move Apple did sink lower today, okay? It got to a low of 144, but ended up closing at 149. Let me go look at the 5-minute chart here for Apple so you can see this. The majority of the pain occurred early this morning. You can see that there was a pretty big gap down this morning for Apple. But once Apple gapped down there and it reached its bottom this morning, it was up and to the right for the rest of the day. So don't let this drawdown in Apple today fool you. It was basically a one-time event that occurred when the report came out. Boom, Apple dropped, and then it just moved up and to the right for the rest of the day. So keep that in mind. Even though it was down, it all happened basically within a 1 hour time frame, and then it was over with. All right, let's get to some comments here. I sold all my calls. Not a bad idea. Not a bad idea. But I'm still going to use the weekly expected move, at least me personally, until we get a little bit closer to that, right? Today was like the first day of the bounce. The big question now, are we going to get any follow through? And I think that depends on what some of the other factors in the market are going to do. Is the Treasury market going to continue to come back down? That's a big question. If it does, that could provide a little bit of follow through for the equity market. What about the US dollar? If that continues to come down, because remember, the US dollar, it got a little stretched from its trend line that it had been working on. So it's going to have to come back down and reconnect with that, right? It's been moving pretty darn hard. So those are a couple of things that I'm watching to say whether or not, well, you know what? This dollar's overextended. It just went on a big run up. Maybe there's a pullback for a couple of days in the dollar. That's what I'm watching to determine how far I'm going to let these longs stay on the books. Hopefully, we can get back to the upper end of the weekly expected move. That would be my target. And then profit taking occurs. Okay. What else do we have here? And I'll just AAPL, because I had another thought there for Apple. Should have held some, but that's okay. One thing that one of my most earliest lessons when it came to trading is to once I placed my trade, once I was out of my trade, maybe I had 1% profit or 8% profit, whatever the case may be. But then after I got out, maybe the stock moved another 6%. And I was kicking myself in my butt. Oh, if I would have only stayed in and waited one more day, I could have got another 6 or another 8%, whatever the case may be. Don't look at it that way. Be happy with what you've got, because as easily as that extra 3%, that extra 2% that you could have got, maybe that turned out to be negative 2% or negative 3%. You never know, right? So always be thankful for what you've got, and don't worry about chasing what you may have missed out on, because that would not be sticking to your plan. Because I'm sure your plan does not say chase every stock. If that happened, you would get burnt out and you would be wiped out of all of your capital if that was the case. So you made a good call. Absolutely. Absolutely. Let's see here. Let's throw this up here. It didn't lag. It was just a gap down pre-market, LOL. Okay, good job clarifying. Thank you for that. I appreciate it. If it gaps up, where do you expect the market to open on Apple? Okay, all right. Let's get Apple opened up here. I'm going to go back to, first I'm going to stay right here. No, yeah, I nearly bottom and top ticked calls. Yeah. Okay, so for Apple here, okay, there's been quite a few gaps for Apple over the past several sessions. You can see all the empty spaces here for Apple. So if Apple, oh, and I just wanted to mention, well, it's on my mind and I'm thinking about it, about Apple. Despite the losses from Apple today, which again, we're just in the morning and it kicked back up in the afternoon, the information technology sector, which is XLK, it was able to squeeze out a 0.9% gain today, okay? Now, we'll talk more about the sectors here in just a minute, but that was on my mind. I wanted to mention it. Now, back to Apple. One of the moving averages that I pay really close attention to when I am trading is the 5-day EMA. I think of it as like a circuit board. These candles need to stay connected. Even if it's just the wick of the candle, it needs to stay connected to that 5-day EMA. If it gets disconnected, it's always going to come right back to it, okay? So if we look at Apple here, I'm going to use the highlighter, but I'm going to use a thinner one. It's not going to be as thick. The 5-day EMA has been, where's my, why did I put a trend line there? Okay, maybe I got to use the thicker one here. It's drawing trend lines instead. I don't want trend lines. All right, so the 5-day EMA has been going like this. Of course, it's a little narrower than my wide marker here. But as it moves here, okay, as you can see, all of the candles except for this candle right here, this one got disconnected. And today's candle, those are the two candles recently that have been disconnected. And when they disconnect from that, you can see that this was, and let's open this up a little bit more here. I want to run this point home because this is really what I use to trade here. So you can see that this red candle right here that I'm pointing to right here, okay, this one right here, this candle got disconnected from that blue line, from the 5-day EMA. The very next day, we get this green candle that takes us all the way back up, and we reconnect with the 5-day EMA. And then we stay connected, stay connected, stay connected. Oh, we disconnect right here. Now that I've got it opened a little bit more, we disconnect right here. The next day, the candle did not reconnect with the 5-day EMA, but the wick of the candle did reconnect. The next day, we're connected. Oh, today, we broke that connection. So what I would expect for tomorrow, since Apple kind of ended on a high note today, even though that last 5 minutes it did pull back a little bit, that was your day traders who jumped in this morning, bought Apple when it dipped and then sold at the end of the day. Hold on, I'm just going to get this Sharpie marker off here. Okay. So now that you've seen we are disconnected from that 5-day EMA, that sits at 151.27. So we're at 149 right now, 0.84. I could easily see a gap up right there to 151.27. That would be my target for Apple tomorrow to jump back up to. Okay? That doesn't mean it has to stay there, but intraday, at the very least, or a gap up from this evening to tomorrow morning to that 151.27. That's like the bare minimum, because that's where the 5-day EMA is. And these candles, again, like a circuit board, they have to stay connected to that 5-day EMA so the current can continue to run right through it. Okay? So that's when I'm trading, that's what I'm paying the closest attention to when it comes to what could the following morning's gap up or even gap down be. Because when you look at, a candle that gets disconnected on the up end, like right here, this candle right here, on the upside, it got disconnected, right? So the next day, it gapped down. And then at some point, it ended up reconnecting with its 5-day EMA, but then, blew right past it and closed underneath it. But it was still connected to that 5-day EMA. It just ran right through it and down. All right, let's clean this up here a little bit. So again, that's 151.27. That would be the bare minimum target for Apple tomorrow to reconnect there. Okay, I'm going to go down here and let's grab this real quick. Interesting. I like that analysis. I longed from 147.33 and holding it overnight. Yeah, with Apple today and the report hitting, it dropping first thing in the morning and then rallying the rest of the day, right? Excuse me. This doesn't look that scary to me. This looks like an overreaction occurred this morning, and then traders were taking advantage of that and bidding up Apple through the rest of the day. So even, at the very end of the day, it wasn't until the last 5 minutes there that we had a bit of a sell-off, and it was 1/3%. Let me hop over here to the 15-minute chart here for just a moment, and you can see Apple has gone through over the past, let's get a few sessions in here. Pulling it in a little bit tighter. Okay. Now, Apple has been one that overall has been holding up pretty well in this bear market. I got to give Apple credit for that. But as we move forward and we get into our earnings recession, that's when I think Apple might actually trip up and not be able to hold on quite as tight as it has been. So you can see that overall we are in a downtrend, but Apple's kind of been in that contracting phase recently. Instead of the expansion, it's been contracting. And you can see that with price, kind of moving sideways there, almost flagging if you want to look at it that way. It was definitely moving, more sideways right here. So it's going through these expansion, contraction phase, expansion, contraction. And then this morning we had, well, my highlighter disappeared. Contraction right here through here. And then we had the expansion this morning, but we had expansion kind of right back out of that. We need to have our contraction phase. So maybe tomorrow for Apple just, maybe it moves sideways. That's a possibility there to get back into that pattern. Because if you look here, Apple had an expansion, a really short contraction right here before expanding back down. And then this right here was kind of contraction, although it was more in a downtrend, but price did bounce around quite a bit there. And you could say that it was flagging there as well. All right, let me clean this marker up here from the charts. Now, I do want to go through and talk about the sectors. They're still on my list here. A couple lives. There we go. All cleaned up. A couple of live streams ago, I got asked the question, what are some sectors that could really pop? Communications was one of those that I mentioned, and it did pretty darn well today. Okay, let's see here. What's the next one up? I want to make sure I get through your comments because they're the most important thing before moving on. My idea was that since Apple was so strong the past few days and really saving the spot, yeah, it saved the S&P 500 for sure from tanking. I figured it would close the gap after the overreaction. Absolutely. And it pretty much did. Let me see how close did it come to here. Not quite closing the gap, but boy, did it sure come at over what, 3/4 of the way. So let's see, closing at 150. That's, see, that's strange too, right? The Apple's last candle of the day yesterday closed at 151. Where's the 5-day EMA? It's at 151. So seeing Apple, close today, although I don't really like that candle that it closed on, getting back up to that 151 area is definitely within striking distance, and it could easily get there. You can see that red line that runs through here. That's where that 151 is on the chart. So it's not far away, a couple bucks, and Apple has fulfilled that 151 target there. Okay, let's see here. No, that's a good idea too. Just want to say that. Thank you for posting that idea. I do greatly appreciate it. And so does everyone else watching. This live stream is for you. That's why I will stop whatever I'm doing to talk about your questions, because that is the most important thing. All right, let's keep moving on here. We're going to talk about the sectors here. Excuse me. All right, so notably, right, the technology sector, it's where I left off on. And over here, the right-hand side of your screen, all of these here are the 11 S&P 500 sectors, and you can see nothing but green today. Isn't that pretty cool? So notably, technology, it finished the session in last place, okay? of the 11 S&P 500 sectors. Now, energy today, XLE, was up 4.4% today. 4.4%, right? Again, this is the 15-minute chart, and that was a gap up this morning and a continued run. Let me go to the daily because I've got the updated weekly expected moves on the chart. These go out, the weekly expected moves, they go out to our private investor community every Sunday evening. And then I hold off on a live stream till usually around Wednesday, sometimes Thursday, before showing them on a public forum like this. But for energy, it bounced perfectly off of its trend line, and the upper end of its weekly expected move is $74.91. There's a huge gap that was left here that needs to get filled, and it's a possibility that once energy starts entering that gap right there, it could just melt right up and fill the whole thing by the end of the week. Now, this blue trend line, let's go back here a little bit. Let me adjust the chart here. Now, the lower end of the weekly expected move for energy is 66.05. And remember, those weekly expected moves, they have a 68% win rate. That is very impressive. Now, I will admit that this win rate has been tested over the past several weeks, and we're coming up a little bit short, usually to the downside, because we're in a very inefficient moment in time for this market. I caught your comment there. You're great. I appreciate you. Thank you so much for that. I truly appreciate each and every one of you. You all are totally awesome. This blue trend line, it catches first back here in October 2020. It hits again September 21, and I lost my highlighter. September 21, and then also in December of 21. Why do I keep losing that? December of 21 right there. And now we have a fresh bounce right here off of that trend line. And that's an important trend line for the energy sector here to continue to hold. Going all the way back to October 2020, nearly 2 years ago, this trend line has held for nearly 2 years. Isn't that incredible? That's why I was very confident that energy was going to bounce here, although nothing's 100% guarantee. But yeah, good job there for energy holding that 2-year trend line intact. That's wonderful. Now, I do think, though, with the gap that needs to get filled here, the 200-day moving average is like hovering maybe a fourth of the way into that gap. That could be a pressure point for the energy sector to try to break through, and that's at 73.69. So do keep an eye out on that. Now, communication services did a really good job today. I'll click on that to show you the chart and the weekly expected move. It was up 3.2% today, and we said that this is one of the ones that could bounce the most when we got our bounce. Whenever the bounce would occur, right, from our oversold conditions. Now, let's blow this up here a little bit. The weekly expected moves are updated. I updated all of them last night on the chart. So the lower end is 44. The upper end is 54. So by the close of Friday, the options market using implied volatility, volume, and an equation, and you can get the weekly expected moves, and 68% of the time by the close of business of Friday, whether it's a sector, indice, stock, it doesn't matter. 68% of the time it closes within this window. Okay? That's why they're so important to use, because if you get to the upper end of a weekly expected move, right? And historically, if it pops out middle of the week, beginning of the week, by the end of the week, it's back inside that. So keep that in mind. 68% of the time, that's how it works out. Same thing on the bottom end. Now, nice boost today for communication services. Now, those two, energy and communications, they were at the top of the leaderboard. Communication services had Netflix to thank for its gains today. Let's pull up Netflix. NFLX for Netflix. Netflix was up over 9% today, thanks to an upgrade to overweight from neutral at Atlantic Equities. So a nice upgrade, a nice move for Netflix. Now, Netflix here, these are the updated weekly expected moves for Netflix as well. Let's just open this up a little bit. Bear with me for a moment as I pull this up and open it up so it's a little easier to see. Netflix, this is a great example right here. Netflix closed outside of the weekly expected move because of a big 9.3% move today. So what would that tell me? Well, that tells me that opening a short position in Netflix right now, I would win 68% of the time on that trade, because now that it is pulled outside of that weekly expected move, you can expect nearly 2/3 of the time that Netflix is going to pull back into the weekly expected move by the end of business on Friday, which the upper end is 241.7. Netflix closed today at 245.2. So there's a few bucks to gain there, shorting Netflix back into its weekly expected move. That's what they're awesome to use, and that's why we pump them out every Sunday evening to our investor community, because they work so well. It's one of the easier trades one could make. Okay, let's keep moving on. Another bright spot in the market was healthcare, XLV. It was up 2.2%. Healthcare, the biotech sector in healthcare, I think has a pretty, I don't want to call it bullish, because right now I'm not really feeling bullish or bearish. I'm feeling very realist right now in this market. I don't want to be over bearish or over bullish. Either way, I want to see the market for what it is. Now, healthcare was up today because of Biogen. Look at this one, BIIB. It was up nearly 40% today. 40% today. Wow. And it jumped. Look at that. I mean, it's like a firework going off. That candle, make sure you guys can see it. That candle is way up here. All right. And it launched from way down here. Biogen did this nearly 40% pop today. after reporting that its early Alzheimer's treatment drug met its phase 3 clinical trial primary endpoint. So this is looking really good for BioGreen. All right. Or Biogen. I'm sorry. My mistake. Biogen. But this right here is what lifted the healthcare sector up. And I think healthcare, it's got a lot of potential. Okay. That's a sector that I didn't mention the other day, but I do think there's a lot of potential sitting within it. Now, let's talk about the energy complex, because this is what helped to lead energy to being the top dog today. Energy complex futures settled higher with WTI crude oil. Those futures rose 4.1%. Just type in USOIL, US oil. Oh, and I left this up here. Let me take that down now. Thank you again for that. I appreciate it. US oil, just type it in. Real easy ticker to remember. We got to hang up here. What's going on? I guess I'm trying to work two screens here, and it's just not working out for me, huh? There we go. Okay. All right. Okay, here we go. Now we're getting our stuff to load now. I'm on the right screen. All right, so oil here. Let's get that off of here. Get this back opened. I want to see if I can stretch this out a little bit further here. Now, this green marker here, this was a critical area of support, and it acted as support. New PC soon. I see that. Yeah, I would like to do that, but to be quite honest, I am treating this as a business, and I don't want to put too much capital into the business. I know you have to. I've been an entrepreneur, many companies, put lots of capital, grown them to over $1 million, sold them, and then moved on to another one, rinse and repeat. But this time I'm taking things a little bit different, and I am growing the business portion of this YouTube endeavor here. As it grows, then I grow the equipment being used. If that makes sense. So I need a little more business to upgrade to that new PC. I know it would be awesome, and I know it would run a live stream a lot better. But I'm trying to be very practical with this. This is obviously a hobby that has I'm trying to turned into a business. I LLC'd it and everything. So yeah, I'm just growing it as it grows. I mean, to believe it or not, the ad revenue from YouTube, it's not as much as you might think. The videos that we do, I know it's mainly just a daily live stream when the market's open, but that might bring in $10 or $11 a month. So definitely not anywhere close to what I would say being successful. But hey, we're here. We're doing it every day. So we'll see what happens. Whatever happens, happens. But oil here, ooh, this one is interesting because we've got this old support that has turned into resistance. Let me get that highlighter back here and do this, which has now turned into resistance up here. And you can see now that we've made a lower low, a lower low. You could go like this. We got our high. We've got a lower high. And then we got a lower high. So this structure now is not looking good for oil, which is surprising me a little bit, to be honest. So now when we go looking for, okay, where is support going to come in at? Well, it's now dipped below where support should have come in at, right? Going back to where this green highlighter was right here that I just turned blue, well, that kind of lines up where this bounce was here. But it has now broken below that, and it almost looks like it is going to turn into resistance. If that's the case, then where do we look to for oil to go? And unfortunately, when you come over here and look, okay, where's some past support come in at? And you're looking right here. And if we were to come over to where we are today, the absolute peak of that support area is right where the bottoms are right now. So a $75, $76 a barrel, that's where the support needs to hold. Otherwise, it's gonna go lower, like into the 60s, like $66 a barrel. So oil's got to be careful where it's at right now, because if it slips here, and the reason oil has been slipping has been the fear of a global recession. A global recession. It means less people are traveling, less people are working, less freight is being shipped. So, travel going down, stuff being shipped around the world going down, there's no need for oil, or the demand for oil is lacking. Just like with Apple. I'll bring this right back around to Apple. If demand is lacking, then what is that going to do to a company's balance sheet? What's that going to do for earnings or for margin? It's going to provide margin compression, and we'll get our earnings recession. Now, oil rising over 4% today to $81 a barrel. Natural gas was also up 2%. All right, let's talk about some of the data that we got today, and then I'll wrap it up with some cryptocurrency here. I'll bring the SPY up on the screen here. Now, we got our weekly MBA mortgage application index that showed a 3.7% drop after last week's 3.8% increase. Then we got the August advance report for international trade in goods, and it showed a deficit of $87.3 billion. Now, last time the deficit reading came in at $90.2 billion. So that did drop down a little bit. Then we got the advance report for retail inventory. And just like I said yesterday, it rose 1.4%. 1.4%. And on top of that, we had the 1.1% increase back in July. So companies are getting pretty packed here with inventory. And when you have excess inventory, what does that do to a company? That causes margins to be pressured. Why? over inventory gets damaged, misplaced, lost, stolen, all of that has to be discounted. It becomes last season, last year, and then it has to get discounted to even go out on the shelf. All of that costs a business money. And when a business costs go up, margins go down. Earnings recession. It'll happen. We also got the advanced report for wholesale inventories. Now they went up 1.3%. So retail inventory is up 1.4%. Wholesale inventory is up 1.3%. Don't want to see that. Now, the one thing about the wholesale inventories report being up 1.3%, they were only up 0.6% in July. That's a much bigger increase in wholesale over retail month over month. All right. And then we got more bad news for the housing market with the August pending home sales. They dropped 2%. The expectation was only a 0.5% drop. So 2%. And then the July reading got revised to a bigger decrease of 0.8%. There's no longer little cracks in the foundation of the housing market. It's flat out starting to fall apart now. So when could the housing market see its low? I believe middle of 2023. I think that's when you really start looking out. If you are a home buyer, but you were priced out of the market because interest rates shot up, unfortunately for you, and I'm in that boat, remember? We were looking to buy a house, but we just got priced out of the market because interest rates going up. It didn't make sense for us anymore. So we're waiting for the housing market to cool off, to come down, so we can go buy a home. It's something we used to talk about at the beginning of the year quite a bit on the live streams, but, you know, since we've been priced out of it, we haven't talked about it very much. All right, so looking ahead to tomorrow, market participants will receive the following economic data. At 8:30 a.m. Eastern, we get our weekly initial claims. The expectation is the same as last week's actual number, 213,000. We get continuing claims. The prior reading was 1.39 million. At the same time, we get our third Q2 GDP estimate. Now, the expectation is negative 0.6%. That's exactly what the prior reading was. So if Q2 GDP remains the same as it was, it will not affect the markets tomorrow. And I'm not expecting Q2 GDP number to move at all tomorrow. I think the negative or contraction is accurate. And Q3 GDP, the first estimate has not come out yet, but you can use the Federal Reserve's GDP Watch tool or GDP Now, and it gives you a pretty accurate number for where GDP stands right this moment. And right now, it is in the error or the margin of error. It's on the positive side, meaning expansion, not contraction, but it's within the margin of error. So it could be another contraction. Now, I've said it before, I think that by December, towards the end of December, maybe Q1, I think that time frame, I think that's where we really find out what type of recession we are in, right? Because by that time, we're going to have a whole nother earnings season run through us. We'll have a whole bunch of economic data to look at. So some more data points to go into our investing thesis, our market thesis. We have a Fed meeting, not in October, but November 1st and 2nd. December Fed meeting, FOMC meeting is 13th and 14th. So we'll have a whole lot of data between now and then to update our mindset and our thesis on the market. And I think we'll have a much better grip on whether this is going to be a shallow, soft landing recession like we're in right now, or if the Fed is literally going to crash, not have a soft landing, but crash the plane, meaning our economy, and it being deep and drawn out. I think we'll have a much better grasp end of this year, end of December, beginning of next year. Okay, let's talk about any, let's see, good. These home prices are unrealistic, aren't they? Oh my gosh. And we live in Northern Virginia, and Northern Virginia is like its own little bubble. There's hardly a correction in Northern Virginia because of all of the government jobs. So, excuse me, it's a tough market for buyers for sure, because there's always demand because of the government jobs, the military bases. Oh my goodness. Okay, let's look at the SPY of the Qs and then Bitcoin, and I'll wrap up this live stream. First, let's look at the SPY. Let's open this bad boy up here and get a closer look. Just give me a quick second. Just trying to get these candles illuminated. All right, so there is a gap that was made Friday, and the wick of today's candle did get in there. And of course, yesterday we closed, and we closed way down off of the 5-day EMA, reconnected with it today. I think we could melt up through this gap tomorrow. And quite frankly, we're at a 25 on the RSI. The MACD has started to flatten, potentially curling up. So I think we've got a good chance, as long as the headline news doesn't have anything overly drastic in it. I think we can just slowly glide higher in this market over the next couple of days. I think that's possible. The upper end of the weekly expected move for the SPY is 380. I think there's a possibility we could touch it. See, right now for the SPY, 372 is an important area. And if we look at today's high, that was today's high, 372. And if we look at the volume shelf profile over here on the left side of your screen, that's these green and yellow bars. There is a gap. If we look at the bars right here, there is this air gap right here, right? Volume picks up at 372. Okay. That means there's supply. That means that there's a little bit more supply than there is demand. So filling this air gap, which was done today, brings you to a point where there is supply, meaning there are sellers, but there's more sellers than there are buyers. And to drive that point home in this price level, which is basically this whole gap right here, the supply is 13 million. The demand is 7 million. When you have an imbalance like that, it makes it hard to push through. When you have more supply than there is demand. What you want for a market to go up and for price to appreciate, you want more demand than supply. You want to push that thing up higher. But right now, at this price point, where this gap is right here, unfortunately, there's more supply. And then if you do make it above that and you get higher, then the supply demand jumps to 17 million supply to 12 million demand. And that takes you to the top of the candle on the 22nd, where there is a small little gap right there. So it's going to be difficult. And I would imagine if we grind higher, it'll probably be slower grinds. I don't think it'll be big grinds like we have seen today, getting close to 2% or cracking 3% like the IWM. So do keep that in mind. There's nothing to say that it can't shoot up higher. But keeping it real, looking at the data, there's more supply, and it's probably trapped from the gap down on the way down. So those could be investors or traders wanting to exit. So we have to be careful there. Now, let's look at the Qs. They were up 1.9%, so a little bit more than the SPY. And just so you know, while this thing is loading, if you do have any questions, now's a good time to throw them in as I'm kind of, wrapping this live stream up as we just go through the Q, IWM, and then Bitcoin and Ethereum. And then I'm done with my list for today. So make sure you get your questions in the live chat here. Let's raise this up a little bit so we can see it a little better. The upper end of the weekly expected move is at 286. The lower end is 264. We are reconnected here with our 5-day EMA, which is great, but we are still in an uphill battle. We are oversold. Volume increase today. That was nice. RSI is at a 27. The MACD has flattened. But if we look here, we had a pretty good balance of supply demand for today. To give you an example, it was 6.6 million, I'm sorry, 6.4 million on the supply side versus 5.6 million on the demand side. So much closer than on the SPY. That makes it easier to rise, right? All right. But now we're running into a little problem here where the Qs kind of trickled out today at about that 280 mark. Supply is at 10.4 million. Demand, it's at 6.9 million. So a little bit more of an imbalance there, making it harder to press through. All right. Okay, let's go look at the IWM. That's your small caps. It moved the biggest today. And as you're getting your questions ready, if you do have any while this one loads here, do me a quick favor. Click that like button and share this video with a friend. Those two things are awfully important and they help out a small channel like this. And if you like the perspective and you want more of it, then click the first link in the description and join our investor community. You'll get instant access to our weekly expected moves, numerous trade setups in different trading strategies, top 10 stocks in 4 different categories like growth, value, dividend, momentum, economic and market insights, and a private Discord server that also has some public channels on it as well, all to help you along your investor journey. So come gain the knowledge to become a better investor, a better trader, to achieve that financial independence, and click the first link in the description. And if it's your first time watching, consider clicking subscribe too. All right, for the IWM, which made the biggest move today, let's bring this chart up here. The upper end of the weekly expected move is 174. The lower end is 160. Now, if we look at the volume profile, if the IWM can break that 173 area, there's an air gap. Yeah, there's an air gap here. Now, an air gap means there's a lot of demand and hardly any supply. And price action can really move quickly through that. There is this air gap right here, okay? And it goes from about, let me line this up here, 173 all the way up to this red line here at 179. So 173 to 179, there's an air gap on the volume shelf profile, meaning there's more demand than supply. Okay? More demand than supply. To give you an example, we have at 176, we've got 1.6 million demand, 1.6 million supply. Pretty cool, huh? And then at the 178 marker, you've got 3.7 million demand and only 2.5 supply. That's why air gaps are critical to watch when you're trading, because price can move through those rapidly. And they move through rapidly because there's more demand than there is supply at those price points. Okay. Let's go to Bitcoin. I haven't been to crypto in a while here on the live stream, but it's a good thing we check in on it every once in a while. So I think Bitcoin is flagging here, giving it a bit of a bearish bias, here for Bitcoin. Oh, come on. It's just taking its time to load. Okay. So obviously it's at 19,500 right now, which is in my buy box for Bitcoin And my philosophy here for Bitcoin, I think it is going to go higher. I think it's basing out right now for a good platform for it to bounce from when it gets into its next bull cycle, which isn't anytime soon. But right now, I do believe it is producing a bear flag right here. You could also potentially say we've got a rising triangle, a rising wedge right here. And that's just going to be a continuation, and you'll see it drop at some point. That's what I see here for Bitcoin in the short term. Now, for me, anything under 20,000, I think is a good long-term buy for Bitcoin. My buy box is 20,000 all the way down to 16,000. We haven't got there yet, but if this pattern that it's forming right now as price begins to tighten, if it breaks out to the downside, watch out for it to break under 18,000. I think that would give a really nice buying opportunity if it does break under 18,000 for Bitcoin. And I think that's potentially where it might be headed next. Now, we could get a couple days worth of rallying going on to really stretch out this. Either you really can look at it as either a rising wedge or a bear flag here, which both are just going to send this thing potentially lower. And again, 18,000, if it breaks that, I think you got a good opportunity there to buy. Now, on the Ethereum side, Ethereum, the merger is done. We had the sell the news once the merger was complete, just like we said would happen. Now, 13,040. I think this is a wonderful place to buy Ethereum. I think within the next decade, 2 decades, Ethereum can easily, I think it can easily top 10,000, 15,000, 20,000. I think that is definitely possible. So imagine buying it here at $1,300 and that coin being worth 10,000, 20,000 down the road. Right now, myself, what I am doing personally, I am not worried about the other altcoins. I am solely focused on Bitcoin and Ethereum. That is it. I don't look at any other coins. I'm not interested in any other coins because I have conviction that Bitcoin and Ethereum are enough. And Bitcoin and Ethereum will take me to my ultimate goal. So that's what I'm thinking there. Now, Ethereum's also flagging, just like Bitcoin here. This could lead to another low. And if we break $1,000 for Ethereum, and if you look here, the last time that would be back here in June. And did we break it here? Not quite, but got pretty darn close back here in the middle of July. So we've got the middle of June and the middle of July being the two lows. You could almost say that Ethereum is making a higher low there and then a higher low. You can't really say that for higher highs, but at least I think, just like Bitcoin, I think Ethereum is building a base to launch off of, and that base is somewhere around that $1,000. Bitcoin, I think that base is somewhere around maybe the 19,000, maybe as low as 18,000. I think that's Bitcoin's base. And Ethereum, I'm thinking it's more along the lines of 1,000, maybe 1,100, in between there, that zone. I think those are the bases for both of these coins that they're going to start to build. It'll start to stretch out over time for it to launch when it gets into that next bull cycle, which again is no time soon. But you can stack those coins right now while they're cheap and either hold them until forever. Because one cool thing that you can start to do with Bitcoin, and you'll be able to do more and more and more, is just like a house. If you can pay cash for a house, then you borrow the money from that house. You borrow from the equity in the house. And then your, quote, mortgage is you basically repaying the loan to yourself. That is a very smart way to work. There are tax advantages. It is look into it. Look into it. It's much better to repay a loan to yourself than it is repaying a loan to a bank. So crypto could be held as collateral. I know of at least one company that's doing it. More will. Because right now, you go buy a house, you've got equity in Bitcoin. You're holding that asset. And most of the time, banks see that and they just mark it down to a 0. And it doesn't count. So, yeah, good things to come with Bitcoin and Ethereum. All right, ladies and gentlemen, I'll wrap it up here. Thank you guys for joining me. I'll be back tomorrow after the market is closed to talk about what happened, why it happened, and what to expect going forward. So have a wonderful evening and have a wonderful day in the market, investor community. I will talk to you throughout the day tomorrow. And for everyone else, I will see you back here live after the markets have closed. And I'll see you in the next video. Take care.